Stock market today analysis for December 12th, 2022. We have a big picture look at almost all the financial markets throughout the United States. Each one of these in here is a daily candle with a 1 month time frame, and this is a 200-day moving average. Over here we have a 1 day, 1 hour chart of whatever is in here. And right now it's UUP, which is the dollar. And we see the dollar for the last 1, 2, 3, 4, 5, 6, 7, 8, a little over a week has been flirting on top of this 200-day moving average. But that 200-day moving average is maintaining support on it. If this crashes through here, then we're probably going to see gold, maybe oil, go up to the top. But generally speaking, precious metals kind of act inversely with the dollar, and sometimes other assets too. But that's what we're looking at the dollar right now. TLT 20-year bonds for 2 days in a row close on a down day, but basically kind of going sideways. And exactly where it's drawing the support from, not really seeing that in this last 30 days of trading. It seems like it's maybe building some new support right in here, but it's under that 200-day moving average, going up towards it. And for a while, what's been happening is whatever direction TLT has been moving, the stock market has been moving that way also. Is that what it's been like for the last 10, 20 years? I'm not sure, but it seems like the last couple years, or I don't know how long exactly, but someone draw that to my attention, and it seemed to be doing that pretty well yesterday, Friday, right? Here's SPX, got a sell-off in the bonds, TLT sell-off here, but not so much today. So we'll see if that continues over the next couple months. Gold broke below that 200-day moving average. I wouldn't be surprised if we see it still basing around here. You see in the last month, touched here, came down, touched here. See that price consolidation or stagnant, whatever term you want to put in there. You know, it's like sticking if it's on top or on bottom of this price. So maybe somewhere between 1820 on the high and 1780 on the low. And we see just a bit of a downward sloping 200-day moving average. Oil still below that 200-day moving average, and wow, really testing down here in the 70s, kind of moving up. We want to see how close can it get to 80, and what's it going to do around 80. But it's got to get through 85, or excuse me, 75 first. You see we got this pivot point there where it's basically coming down, then start going up. So that's kind of in that $75 range. So we're approaching that. We'll see what happens. And then once it gets past that, around this 80 range, and then just a little bit over that, we see prices kind of sticking around 80, just like these different candles, touching, closing, whether on each side of 80. But ultimately, this other pivot point right in here, to see what happens through probably from 80 to like 83 or something like that. Bitcoin futures, and just going sideways for last month, but it's maintaining right now. Where is it right now? 17, so above 17,000, right? Where we'll see if it's gonna maintain that. The 20-day, 50-day moving average is probably somewhere around in there, but just to keep the charts kind of cleaner, we're taking it off. And ultimately, I just got bored of Bitcoin going up and down over the 200, or the 20 and the 50-day moving average, and then failing through it. So because I can't easily, legally put any positions on Bitcoin, I just gonna watch the futures, and until it's like above and maintaining above the 200-day moving average, then just kind of watch it on the price from there. Now down here we have all the stocks, right? Up here we got the dollar, treasury, which is kind of related to the dollar, gold, which is related to the dollar in this concept. you need dollars if you if you live in Philippines, then you need pesos if you're gonna buy gold in your local currency. But I live in the U.S., use dollars, so kind of whatever place you live in, swap that name. But since I'm in the U.S., that's why I'm looking at the dollar here. But people in my country need dollars to purchase this, and the strength of this dollar is reflected in this price. So you could say, what's the paper price? What's the dollar exchange ratio of gold? This doesn't really, this number doesn't really indicate the actual value of gold. It indicates the value or lack of value in the dollar. The less of these dollars you need to purchase 1 ounce, the more valuable your currency is. The more currency units you need to purchase 1 ounce of gold, the less valuable your currency is. The ounce of gold never loses a gram. It doesn't tarnish. It doesn't corrode. You can chop it up, you can melt it, and you can remelt it. You can turn it into jewelry, and you can turn it back into a coin. You won't lose anything. Gold is basically going to be around forever. And so the value of gold is actually not determined by this paper price. Now, some people might want to trade gold and try to increase their paper price, right? And from what I've seen over the last 15 years, that you got to be pretty skilled in that. It might be easier to trade, something else to increase your currency units. But just don't get confused of when we're looking at this purchase price, it's more of a reflection of the value of this. Is this of high value or low value? If it's of high value, you won't need as much of that to buy this. If it's of lower value, then you're going to need more of that to buy this. And so down here, we got the SPX, which is kind of a mixture of a variety of stocks. It's some of these like blue chip stocks, and it's some of these like technology stocks. I'm not sure if it's any small cap, whatever, but it's a mixture of 500 different stocks. I think this is 50 stocks, and they're all big chip, what do you call that? Blue chip type of stocks. McDonald's, I don't know if we have to look up a list of those. And these are more technology stocks, and these are the small cap mid-range stocks. And this is a reflection of the VIX is a reflection of people buying. Basically, in a nutshell, this is looked at as the fear index. So right now we see today, boom, it bumped up. So that would indicate that people are a little more fearful of what's happening in the stock market. Not just people like you and I, like big institutions, family offices, hedge funds, pension funds, mutual funds, insurance companies, people that move big amounts of money. So we see, even though every index in the market went up today, so did the VIX, which might indicate to us that people that manage big amounts of money, they're not totally thinking that this is a normal bull rally. They might be thinking that it might be getting ready to drop. Now, SPX is still under that 200-day moving average. We see that it rallied up here and failed. We see that the Dow Jones has been above. Look at that big gap above the 200-day moving average, but basically moving sideways, right? Up, down, and in the last 30 days, kind of sideways in this range. And you see the sloping, downward sloping 200-day moving average. We see a slightly downward sloping 200, but it kind of sideways to down. In the last month, definitely down. And that brings me to this, just to let you know. So candles, we're looking at relatively short term, 1 month, right? 1 month information here. Now this is averaging 200 days. So just by taking a quick look at this whole thing, looking at that red line, you see the dollar has been up, treasury's been down, gold has been easily sloping down, not as strong as the slope of this. Oil is a slow, kind of easy slope down. Bitcoin, kind of strong slope down. VIX was kind of going sideways and then started sloping down. SPX, kind of a strong slope down. Barely slope down, almost sideways on the Dow Jones. NASDAQ, strong slope down, which you see basically has been going sideways in this trading range the last month, even though it rallied up here, so it made that range a little higher. Right here, it's just been kind of in this range. And then the Russell 2000, we see sloping down. And we see a big downtrend actually in the 30-day candles in this. It rallied up here, this 200-day. Over here, failed. Rallied up here, failed. The 200-day. Here, rallied up higher, failed. So it's kind of tells us that, you know, we're still, looks like we're still kind of in this downtrend. Now, in order for this downtrend to be over, all four of these, we want to see them above the 200-day moving average, kind of like this. It doesn't have to be that far above, but we want it to be above the, we want all these to be above the 200-day, and not just this temporarily above, like this, not temporarily, like permanently. We want to see it going the opposite way. We want to see, what do we say? We don't see anything like that. We want to see movement like this, but with the 200-day down here. Now we could, if we want, we could look at each one of these on just the daily candle. So for example, right here, this is showing, actually, see this line right here? This amount right here is this candle right here. This right here is that candle. So we could look down at an hour, but we're not going to do that right now. We got a big picture of what's going on in the overall stock market. And we'll take a look at these. I know that says 9. I got to change that to 11. This is really, ooh boy, get back over there. This is really 2, 4, 6, 8, 10, 11. It's 11. So various sectors that make up the stock market. So let's take a quick look at those 200-day moving averages, right? Before we even talk about the names, the candles. Okay, this one, kind of a strong slope down. This one was moving sideways, but it's starting to slope up. This one's sloping down. This one sideways. This one kind of sideways to down. This one slowly sloping up. This one, a bit of a strong slope down. This one sideways, sideways, down, and down. So let's count our ups. We got any ups? That's starting to move up. Okay, so we'll say 1, 2. Well, 2 out of 11 on this longer term trend are starting. This one has been going up. This one's just kind of starting. Now, how about sideways? So we don't have a lot of strength to keep the market up just by looking at gathering information this way. How about sideways? 1, 2, 3, 4. Okay, 4 out of 11. Basically sideways. Now down. 1, 2, 3, 4, 5. 5 out of 11 down. Right? So down to sideways, sideways to down, somewhere in there. That's probably what we're looking at for, the stronger, bigger picture trend. Now, trends don't necessarily last forever, right? Sometime they're going to change. So when what would we see if they were changing? Well, these different sectors that are below the 200-day moving average, they would have to be like this, getting out above the 200-day moving average, right? Broke out here. This happens to be consumer staples. Broke out above. It's got to stay above, right? And if it stays above, sooner or later, it'll probably be changing like this, assuming it starts going up. This is healthcare. It's been in a pretty decent uptrend for a while. And now this one, industrials has been above the 200-day moving average for a while, but you see it's maybe just starting. I mean, overall, you take a quick look at that, that's pretty much sideways. And but remember, this is a 200-day average. This is only 30 days. So apparently it's been going sideways for a while. This is above the 200-day moving average, but it's it's kind of sideways. So if we want to see a real change of the bear market, I think the most probable thing for us to exit the bear market is going to be grinding sideways. And we see that it's very likely that it might go sideways because, what was it? It was 1, 2, 3, 4, 4 out of 11 sectors moving sideways. And probably if we were to look at this like 6 months ago, we would probably see a lot more of this downward stuff. So being that we're just starting to follow this in this sense this way, we'll have to kind of wait and see. But we'll look back here at these, you know, whether these are small, mid cap, whether these are blue chip stocks, whether these are technology stocks, or whether these are whatever. We have every sector. Here's technology, healthcare, financials, industrials, basic building materials, energy, consumer discretionary, consumer staples, utilities, real estate, and retail. So basically all those are going to reflect inside of here. And so basically those sectors make up these. There can be a little more niche sectors, but this is, we're already looking at 11 sectors and, you know, whatever, 10 different things here. So just to kind of keep it simple, we're trying to. So our indexes down, 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 sideways. Right? If we're going to be going up, we need to see those components of the indexes starting to move up, and then we can see it reflected through here. But so far, SPX hasn't been able to get above and stay above that 200-day moving average. Dow Jones basically just been going sideways above it. Technology stocks we see kind of sideways, but under that 200-day. And the Russell fighting to stay on top of the 200-day, but not succeeding. And it's basically kind of this downward trend. Some people really look at the Russell 2000 or IWM, which is a ETF based on this. They look at that as a kind of a leading indicator or lagging indicator, whatever, an indicator of what the stock market's going to do. So I'm thinking we're definitely not out of the woods. Now, come next year, you know, if we start getting something that's similar to quantitative easing, whether they call it quantitative easing, whether they call it something else, whether it's the treasury, whether it's the Fed, whatever, you know, no matter what name you call your hand, if it is able to function like a hand, it's a hand. So no matter what program they call it, no matter what they say, if it causes the stock market to go up, stock market's going to go up. If they don't do something like that, then we're probably just going to keep going down to sideways. Let's take a quick look at this MMRI risk indicator, and risk is, it still continues to be in the high level, 200 to 300. Now it was much higher. I think it even touched into 300 a little bit in the past, back in whatever, October, somewhere around there, you know, pretty high. It shows 293. So it's come down since then, but you know, we're not down here in moderate or low. We're definitely in high. Our longer term, like the 30-year treasuries, those are still continuing to pull back. If you've been following these videos for a while, there was a time when all four of these were pushing towards the top part of that 52-week range, and now they're pulling back, and it keeps being like this one. The longest duration pulls back the most, and then it just kind of goes like this. But this, when you have these shorter term treasuries giving a higher interest rate, which they're not right now, okay? This one right here though, 5 years, giving a higher interest rate than these longer terms. It's not as bad, but this indicates some financial or economic, let's say, turmoil, or not uncertainty, right? So how would you particularly trade around? How can you use this as an idea of how to trade? Maybe be maybe be cautious. There's certain stocks like, yeah, maybe just be cautious. You know, I'm. This is something I've been thinking about for a while because people, for years, I've been hearing people talk about the yield curve inversion and all this stuff, and then, you know, I don't see this like instant way to kind of deal with it. But so be cautious, and depending on where you are in the learning scale, but wherever you are in the learning scale, get yourself a paper trading account. I've been really dialing in my Thinkorswim account, and the paper trading, which I normally would show you these paper trades that I have on it. It's not as dialed in as this, so once that's dialed in, I'll be making these videos with that so we can go over the some different paper trades that I have on. But yeah, get a paper trading account, practice different different type of trades, and what I recommend you start with to paper trade and see if you like it is it's a strategy that that is my bread and butter strategy, and that is selling cash secured put options on stocks that you don't mind owning the rest of your life, or maybe you want to own the rest of your life. The reason why I like this strategy, and it's not the only strategy I do, but it's a strategy that probably makes up somewhere, sometimes 100% of my positions, sometimes 90%, and, you know, maybe in some extreme cases 80. But on average, it probably makes up about 90% of my trading. I do this, what I personally consider, for me, to be safe, because when I sell a cash secured put option on a stock that I don't mind owning the rest of my life, I'm basically writing an insurance policy on a stock. See this chart right here? Let's say I see here's a bottom, and I don't mind buying a little bit lower than here. So I sell this policy, and let's say I sell it down here, and let's say my expiration date comes up and it's trading down here. Boom! I got a good discount, right? And sometimes though, you know, you might write it up here, and there's other things to it, right? So, but paper trade it. Selling cash secured put options, which means you have the money to buy the put option. And why, buy the stock that you're writing the put option on. Why does this matter? It matters because you can do this from the comfort of your own home. This is going to make you smarter. It's going to give you a better idea of how the world works. And it's 2022. We're going in 2023. If you have internet connection, which you must if you're watching this, you can get a brokerage account. And if you spend money at least once a year, which you probably do if you're watching this, if you want to keep up, you gotta learn how to have your money work for you. I don't mean you necessarily have to master the stock market. You can do some simple things that is basically will take as much time as you want to put into it. But if you don't want to put a lot of time into it, you can spend probably as little as 15 minutes a day, or maybe an hour a week, or however you want to. You don't have to put a lot of time into it, but you have to practice first in a paper trading account. Get some of the stuff, download them all, download one, don't download any. I honestly don't care. I care that I'm doing it, and I hope you do it. I want to be there to help you if you want to do it. But ultimately, whatever you do, you're gonna lie in the bed that you make. And I just want to help the people that are like me and that want to lie in a comfortable bed. You guys have a fantastic day, and I'll talk to you later.